In this video, traders, let's have a look at how to analyze our daily charts to potentially come up with day trading or even shorter term swing trading ideas. Stay tuned. Hey traders, warm welcome to you. Thank you for joining me. Alright, so daily charts are super useful because let's put to one side the fact that many traders are working on that time frame, but it tells us a lot more. And I know some people say, well, the charts are the same, depends on when you can track the time frame. It's exactly telling the exact same thing, but just a different time period. And yes, technically it is. A daily chart's giving us a day worth of data, 15 minutes giving us 15 minutes. So technically it is. However, what's more important with a daily chart is, number one, everyone's looking at a daily chart, regardless of whether they're a scalper, whether they're a long-term investment fund, hedge fund. Everyone's got a daily chart. Not everyone's got a 15-minute chart or an hour chart or whatever. But the other thing is a daily chart. Obviously, depending on what you're looking at. But let's say you're looking at a stock, or you're looking at something that has a specific open and close time. Is that it's the consensus of everybody during that day. Everyone's got the same period of time to trade, and we can't discount that as well for forex. But we've got to also bear in mind it's 24/5 forex. So the point is, with a daily chart, this is very significant. It's how high in the day that people were prepared to keep buying, how low. You know the score, guys. You know what the candles make up. So it's super useful for us to look at a daily chart regardless of what time frame we're trading. Anyway, let's have a look at some of the kind of things that I like to look at when I'm looking at a daily chart. So I'm going to put up I've got the Dow Cash here. Dow Cash is a good start. That's why I've got no volume on the bottom here. So the best way, in my perspective, and anyway, you guys are interested to hear what you have got to say, how you kind of analyze your charts. But I like to look at the chart and go, okay, well, what's the trend? Now, obviously, we've got an uptrend here, so that's no there's no surprise there. However, we have come off the high, and so we've got a little bit of a downtrend. So you start to say, okay, longer term uptrend. Get the pen. Longer term uptrend, a little bit of a downtrend here, and a pullback. So fine. Now, is this uptrend anything more useful for us? Okay, if we're swing trading multiple months, may well be. If we're day trading, probably not. We just note it. Uptrend, bullish. What about this dip here? Now, this is more interesting because it's sold off for whatever reason. What's the catalyst for this? Well, this one specifically was the coronavirus. One previously could be anything else. So, or one in the future could be anything else. So we start to think about that, start thinking about what's driving the market. Okay, fine. Now we start to look and see at where we are in the structure of the current day and the prior day and the day before. Because just like just like anything, guys, human nature, we start to think more about what happened recently. It's like a recency bias. So if yesterday was a bullish day and nothing much has changed, maybe we consider that in our minds more. Not necessarily that we can continue buying, but it's something in our minds. And also, don't forget, markets are always rotational. Especially when we're talking about an index or a big stock with a market cap. Now, some of the smaller stocks and stuff are different, but even though we do have bull runs, there's always going to be some kind of unwinding. Very rarely do we something just go vertical. Now, there's some examples of stuff that does, but very rarely. So even though we have a bullish scenario, we've got to think in terms of cycles, 2-3 day cycles, maybe 4 days. Some people like to do this, but that kind of thing. We say, okay, well, we've come up very quickly in 2 days. What are we expecting from the third day? Are we expecting to go to new highs? So it could do, of course, why we have stops in place and why we always look at stuff with fresh eyes. But okay, in reality, would it damage things too much if we consolidated? Would it damage this bull run if we pull back 100, 200 points? No, it wouldn't. And so that also becomes a question to ask yourself of, okay, even if we did X, would it damage things too much? It's like if we look at the longer term uptrend. Has this damaged the longer term uptrend? Not by much. Okay, if we'd gone again, then we might have been a little bit more interesting. But we have to kind of think in terms of where the big money is and what the big money, how the big money is positioning. And also in terms of how much we're moving and how quickly we're moving. And some people say, well, it doesn't matter, how quickly, but it does matter, because if you think about this scenario here, if you're buying at this level or any time during that day or any time here, what incentive do you have to be the same level of aggressive buying up here? you don't have the same incentive. Now, that's not to say we can't have it, but after the third day, people, if you think about who are moving the markets, they've got orders to buy X, X, and X, or they want to buy XX. Maybe they're going to spread it out over a few day period. But after that, it takes an extra level of buying. It takes something additional, something more meaningful to carry on. Now, of course, we understand supply demand can be affected by lack of sellers as well as buyers, but it's also, when we look at the daily chart, it's thinking in terms of, okay, what's happened? How are people feeling who are here, buying here? If they're buying here, are they really going to be buying here? Maybe the real bullish ones are. If they think we're going to hit 30,000 on the Dow, they might be. But are they going to be as aggressive as they were here and here when they consider that to be, good? News came out as more positive. It's already a bit of a discount from the highs. They're already buying it quite a lot from back here. Is that not a great bargain? Well, it is, and that's why we kind of got these. Well, it was hindsight, obviously, and that's why we got the rally. But here, where are we now? Well, we're near highs. Is it that much of a bargain? No. Is there any reason to really be that aggressive? Well, maybe, maybe not. But you can see the difference. The difference of how aggressive buyers are, off a low like this, where there is a reason to be. Not necessarily it's going to be, there's a reason to be, because it's a significant discount if you're bullish. So if the bulls win, that's why we see these kind of big moves off the low, or decent chance of there at least being some buying there. And we start to think a little bit more about who's behind the move, the bigger players in the time frame, and all this kind of stuff. If we look at something like the Qs as well, this is a much stronger move, a much stronger chart. The daily's stronger, everything's stronger. That horrible down day here, yes, is a bearish engulfing, but the gap up there has negated it. The gap up after the highs, the closing at highs, has negated it. But now, unless you've got a real urgency, why are you going to be piling into tech really hard up here? Now, appreciate. And I'm not talking about this is not hindsight, guys. I'm not saying, well, look, this definitely would have been a red day. No, and I was actually buying in the morning of this day, which was a good trade to make, and subsequently we'll see what happens in the afternoon. But the point is this: is that when you've seen the market move very quickly in a very short period of time, the temptation is to think that we're just going to rip to highs even more and more and more, and that's a trap that people fall into. There's nothing to say we can't do that. We might even do it in the afternoon. But the key is that we will often rotate. We will often contract. We will take a breather. That might be consolidating sideways. That might be a red day. It might be a doji. It might be any of these things. As you can see from all these kind of things, big moves, relax a bit. Little move, relax a bit. We get a big move here, relax a bit. Doesn't necessarily do much damage to the chart. We gapped up reasonably here, we gapped up to highs. It's not looking anything different on the daily, but if you're trading intraday or a 2-day time frame, it's quite important that, because if you're kind of chasing at highs and it's pulling back on you, and you can't sit through that. So it's starting to think a little bit more about the rotations. It's starting to think a little bit more about not being afraid to miss out, being cautious about where you're buying. It's perfectly fine to be bullish, but being careful you're not one of these people who's buying after a 3-day up day or selling after a 3-day down day. Now, there are exceptions to the rule, of course, but if you look at the broad spectrum of everything, it's rarely the right thing to do. I keep drawing the pen on that. It's rarely the right thing to do when you're looking at some of the thicker indices, bigger indices and stocks. Look, we've got red, green, gaps. Chasing stuff just never serves you. So just something to look at, guys. When we're looking at a daily chart, start to think outside the box a bit. Start to think a little bit more. Who's on the other side of the trade? Who's really going to be aggressively buying now? Who's really going to be perhaps taking some profits off the table? Maybe we'll get some short covering. Maybe that's why we get a little rip to highs. But once that's done, is that going to continue for the whole of the day? Probably not on a broader index. Some people might get trapped for a little bit. So you start to think about chunking up the days into times, like what's the morning going to be like? What do I expect lunchtime? Could we rally in the afternoon? Maybe we could. Maybe once it consolidates a bit, people might start buying again and the algos start lifting up. So it's rather than just looking at technical analysis, guys, and going new highs, putting your moving averages on, putting your Bollinger Bands, whatever you do, start to think a little bit more. It helps me, hopefully it will help you as well, about who's on the other side of the trade, where's it going, what could happen, and what's the likely scenario here? What would most people do? What would you do if you were a buyer here? What would you do if you were a seller here? I'll start to think a little bit and start to think of what the majority of people possibly are positioning. It doesn't mean you're going to always get it right or always kind of pinpoint the best possible trades, but it sometimes stops you from getting caught up in the fever of it all, sometimes stops you from getting trapped in things, and just lets you think a little bit, because a lot of people will be buying straight off the open, thinking it's going to highs, blah blah, holding. It might even just kind of pull down here, take them out, then revisit. So you've got to think of every kind of iteration possible, and this happens to be where we are now, but regardless of when we're looking at on the chart, same kind of things applies. You're just thinking outside the box a little bit. Don't get caught up in the fever, euphoria, and it'll keep you at least aligned on the majority of the time on the right side. Take care, guys. Bye bye.